Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update, and today is the big day. Today is that all-important Fed day. Obviously, Fed days are always important, but this one particularly so. With obviously all the action we're seeing going on in the markets, which is all basically driven by Fed policy, by their interest rate decisions, and then by their their quantitative easing, their balance sheet expansion, and all that fun stuff. So yeah, today is in the context of what is normally an important day, is an especially important day. So the problem with that though is that when we go over to those Bitcoin charts and look at the other charts, is that a lot of the price action at the moment is unless you want to work on the assumption people are front running what the Fed is going to say and do because they already have that information. Unless you're going to work on that assumption, you just kind of have to assume whatever's happening now is a bit irrelevant. And if anything, what you would then say, if the price action is basically irrelevant, is that just because we've had such a large move down, obviously in Bitcoin and in stocks, that anyone potentially shorting would just be buying their position back into obviously what is going to be potentially a pretty volatile day. So yeah, it would make sense if you're short, just take off your shorts, and yeah, and that maybe that is what is driving us up. Well, in stocks at least, maybe in Bitcoin also, but yeah, that is what I'm kind of thinking. So the main takeaway though is that whatever this move here has done, if the Fed comes out with something the market doesn't like, this will very quickly tank straight back down to these lows. Or if it comes out with something that the market does like, then yeah, we can blast on our way back towards 40,000. But obviously be mindful of that we've already made a decent move off the lows. So like I have been saying though, the Fed cannot have a meltdown of the markets, because that is a sure way to kickstart a recession, kickstart a deflation. And the opposing forces between inflation and deflation are obviously massive. So it wouldn't take much to obviously flip the massive inflation we've got now into deflation if they basically send the economy into a recession and tank stock markets. So they will be aware of that, and ultimately the bottom line is we know Finance 1.0 and the central banking Ponzi system is reliant on inflation, and deflation would literally be the end. It's the worst thing. It's the worst thing for that system. So yeah, you just know they are going to inflate. Inflation is what they want. They just don't want it as high, because people realize it. I mean, to be honest, they'd have it this high if people weren't basically complaining, but they can't have it this high because people are complaining. So they are going to do everything to avoid a stock market crash, because that will cause a recession, and that will cause the dreaded deflation, at which point they will have to restart QE at basic. And I say restart, it's not a stop, but they'll have to like take QE to the next level, the next exponent, the next level, obviously of that quadratic expansion that is going on, because you have to reinflate a Ponzi, have to come back bigger, harder and stronger, to keep that going. So they're aware of this. As Max Kaiser would say, you can't taper a Ponzi. You literally can't taper a Ponzi. Therefore, the Fed can't taper a Ponzi. So there you go. So yeah, like I said, not really much. I mean, the charts in isolation, these charts are looking good. Stock market is looking good, back above this resistance area, and then looking to push back above 4,400. Bitcoin also looking good, looking like it put in a relatively strong low here. On the basis we had a few wicks down into this support, and then a bounce back up and well above our previous area of support, term resistance, well above there, and now pushing onwards and upwards. So yeah, this was quite a nice move. We've got the next level that we're getting towards, roughly 39,000, and then we can push on high if we get above there. But like I said, anything can happen with price action today. The best case scenario probably is that the best case scenario is that we just go straight up to 100k, obviously, but or 200k. I mean, where do we draw a line? Should we just throwing out arbitrary scenarios? But yeah, probably the best case is we do get up towards here, probably see a bit of an ease off, hold above 39,000, and then find our way back above this important area here, potentially trade sideways, and then ultimately continue upwards. That would be the best case scenario. Obviously, the worst case scenario is we're going to get slammed below 35k again, which case 30k is clearly on the cards and in play. Well, yeah, that is it. I mean, if I had to, just pick something as a what I would, if we say we were making a deal, I'd say I'd like to see us hold basically above 36,000, hold above this support area here, regardless of what else ever happens. Even if we have to grind that sideways around this area, even if we come and test it, if we can hold 36,000, not go below, then ultimately in the coming week or so, push onwards and higher. That would be fine with me. We just want to have a significant bounce here, even if it is going to be an exit liquidity bounce, even if we only get up to into the 50,000s, even if we can't get onwards and upwards to new all-time highs, we can all start distributing into this market around these levels to cut down our risk, and obviously in the process of that move, yeah, fill our coffers like one last extra time. Not too much I else want to look at again for the same reasons. We've got to wait to see what happens today. Let's go to the correct chart. But yeah, there's the stock market. Gold was kind of push and holding above here, but we are just waiting for the gold sellers to come in, force that market down. 10-year drifting up slightly here as well. Potentially with a little bit of risk on. Also, the dollar index just holding around that 96 area, holding back into this range here. We'll have to see what happens if we do come back below. Then yeah, I think we could then be looking at a protracted move to the downside. However, if we do get above, I mean, realistically, we'll draw it in because it's pretty obvious. If we get back above here, then yeah, the dollar bull market will be back on. Not that it's ever really off, but yeah, the dollar bull market will be back on in force, and then we'll be looking for pretty aggressive moves to the upside. So we'll draw that on there. Oil again, going to cause a bit of a problem for inflation, inflation concerns, and just general cost of living. I mean, obviously we all know oil feeds into the prices of everything. And Americans with their big gas guzzling cars and their cheaper gas prices, by gas I mean petrol, diesel, are pretty sensitive to this. So yeah, as you can see, pushing back above this resistance area, so looking like it was just a bit of a reprieve, and the march towards $100 continues. And this alone, as I've said previously, this alone will cause a recession in itself, because that is such a massive tax on people's income, along with obviously the inflation tax on everyone's income. Also, there are so many spanners flying around these works that yeah, it is a tough time, and this is why, like I said, I can't see the Fed I mean, just having to do something, even if, like I have them previously said, it just has to let inflation run wild, and then just give the bottom percentage of the populace that can't afford to live, just give them stimmies, give them a UBI, just dish out free money. I mean, there's no real other way to deal with this scenario. It is a Ponzi, and if you're not gonna basically go through it like one of the worst depressions ever with ridiculous max pain, which just isn't politically palatable, and the political system, I don't think, is even set up to do anything to basically for that to be possible in this day and age, unless it is forced. There is no real surprise that there are obviously stirrings of war around the world, because obviously that is usually like the last resort once the system is in a mess. War is the last resort. So there's no real surprise in my opinion that there are the stirrings of that, just to put that on the table, just to put that on the cards, because at some point the US could decide, well, this ain't nothing really is going to work. Let's just throw the dolly out of the pram and start taking some drastic action in some places. And obviously it's got it's got enemies in high places over in China and in Russia that are quite friendly with each other. Yeah, I mean it ain't looking good. Do you know what I mean? It is not looking good. So yes. On that basis, on that pretty depressing sounding basis, but I mean this is just the Ponzi system we live in. On that basis, we'll have to end this video. We will have to wait to see what happens with the Fed today. Like I said, we look at the charts realistically here and talk about a bit of macro. There's not really much the charts can tell us at the moment, unless you want to assume people are front running the Fed, or if you don't want to assume that people are just closing positions into the Fed. Either one of those, we just got to wait to see what happens today. So it will no doubt be an interesting day. I think the risk is to the upside for asset prices, just for the reasons that I spoke about. But yeah, we shall see what happens, because yeah, like I firmly refuse to believe the Fed is about to tank these markets, cause a recession, and an actual deflation. So regardless of whatever the inflation level is now, if we go into a recession and stock markets crash, we will be in a deflationary environment, not an inflationary environment. And like I said, deflation is the boogeyman of obviously a Ponzi system. So there you go, guys. Remember, this is not a financial advice, not a financial advisor. Always do your own research, and I shall speak to you guys soon.